The people that spend the most time and have the most invested in it, they typically understand the thing. And generally, the conclusion is they invest 100x more than you would.
Welcome to the Daily Crypto. In today's video, we have with us the co-founder of Microstrategy, Michael Saylor. He is one of the leading figures in the crypto space and is a firm believer in Bitcoin and blockchain technology in general. Amidst a looming crypto winter, Michael reassures crypto investors as to why this isn't going to be the end of the world. He goes on to make some very noteworthy points, so make sure to watch the full video because you really don't want to miss out on what the multi-million-dollar crypto investor has to say about Bitcoin. It will help you form better decisions to avoid losses and maximize your returns, while also giving you that much-needed peace of mind during these scary times.
So there are people that have been in the crypto industry for a decade that have master's degrees in computer science, and they think that they're very informed. And they don't even understand what I'm saying. And they've got such a strong bias toward their point of view that they're unwilling to accept a new idea and even stop and think about it for a bit.
This is perhaps one of the biggest problems that is preventing crypto to become widely accepted. People still don't fully understand the potential Bitcoin has because they never bothered learning about it in detail, because if they did, they wouldn't have such a strong bias against Bitcoin in the first place.
Right? The people that spend the most time and have the most invested in it, they typically understand the thing. And generally, the conclusion is they invest 100x more than you would. They value it much more than the guys at Google paid $1 billion for something that if you had asked 1,000 investors on Wall Street, what is YouTube worth? The high bidder was probably Google. And there were probably 5 out of 1,000 that would have said it's worth a lot. And 99% of them would have said, are you out of your mind? It's worth nothing. And so I think that if you're looking for a big idea or the grand idea, it is that you really have to focus upon a small area. And then if you focus on something, spend thousands and thousands of hours, 10,000 hours focused on that thing. And if you have an open mind, maybe your opinion matters.
Concluding his previous point, Michael says that people shouldn't spread misinformation just because they don't understand something in depth. He uses the success story of YouTube as an example, which fits perfectly. Google paid $1 billion for YouTube because it saw the value in it. An uninformed investor who didn't study it in great detail wouldn't even have valued it at $10 million.
I think that if you think about the Bitcoin economy, layer 2 is open permissionless transaction protocols. Okay, layer 1 is the open permissionless monetary protocol, which is the thing we call Bitcoin. And layer 2, the most famous example of a layer 2 is Lightning, an open permissionless transaction protocol. But by no means is it the only possible layer 2. In theory, if you create an open permissionless protocol that integrates with Bitcoin, it could be a competitor to Lightning. But right now, Lightning looks like the dominant open permissionless transaction protocol. Then you got layer 3. Layer 3 would be an application, and maybe a famous example would be like PayPal or Cash App, payment applications. Any application that's moving Bitcoin around. Now you can have a proprietary application, like Robinhood was an application to buy Bitcoin, but you couldn't withdraw or deposit the Bitcoin. So initially, PayPal was the same way. Initially, they're proprietary, but then Lightning comes along, and there's a lot of pressure to open them and make them open applications.
Saylor is talking about the different layers of Bitcoin, which are essentially the real-world use cases. He talks about the Lightning Network, which was the first of its kind permissionless transfer protocol, which allows users to send or receive Bitcoin in a matter of seconds, without the need for any approvals by a third party, thus costing almost nothing in terms of fees.
The next layer is going to be Bitcoin derivatives. Like MicroStrategy is a derivative of Bitcoin. GBTC is a derivative of Bitcoin. All the Bitcoin mining stocks are derivatives of Bitcoin. So you say, how do you get mass adoption? Well, pretty much every shareholder of MicroStrategy is a Bitcoin user, right? Because via the derivative. If a country buys a bunch of Bitcoin and then issues a currency, the currency becomes a Bitcoin derivative. So when a company issues stock backed by Bitcoin, the equity is a derivative. And when a country issues currency, the currency is a derivative. Now you've got, that's layer 4. Those are spreading, right? I mean, BITO is a Bitcoin derivative. And if and when the regulators allow a spot ETF, that'll be the mother of all Bitcoin derivatives.
What he's really saying is that Bitcoin mass adoption is already on the rise. His own company, MicroStrategy, is a prime example of that. It is based on Bitcoin derivative as the stock price is dependent upon the Bitcoin holdings. So ultimately, every shareholder of MicroStrategy owns Bitcoin. A few months back, we had El Salvador announcing that they have made Bitcoin a legal tender, and since then, the country has been buying Bitcoin too. This means that the currency is a form of Bitcoin derivative too, and all currency holders are exposed to Bitcoin somehow, whether directly or indirectly.
Then you've got layer 5 and 6. Layer 5 would be Bitcoin products, like Open Dime, like any hardware wallet, or something like Open Dime, which is even more than a hardware wallet. Products, hardware devices with the protocol, either the Lightning protocol or the underlying Bitcoin protocol built into it. Those are products. You know, you could think about the simplistic products like Open Dime. I have like $1,000 hanging on a necklace. I give it to you. You have $1,000. Well, that's interesting. But when it becomes $100,000, it becomes very interesting. When it becomes $100,000 locked up for the next 25 years, subject to, you know, some multi-signature conditions, that becomes unique.
Actual hardware wallets that have the Bitcoin protocol or the Lightning Network built into it fall under layer 5 and 6. Imagine carrying thousands of dollars worth of Bitcoin that keep appreciating in value around your neck without having to be questioned by banks or governments. This is the freedom that Bitcoin has to offer, and is one of the many reasons why Michael Saylor is a huge believer in the technology. Before we continue with the rest of the video, please like this video and subscribe to our channel, because we are on a mission to help retail investors succeed by providing them with valuable content like this.
What if you applied it to a life insurance policy? Right, so you want to buy life insurance, you give me money and I invest it in what? Bonds that yield 3% interest in the face of 8% inflation? That's a crappy life insurance policy. So what if you give me money and I invest the money in Bitcoin? Right? What can I do with that? Well, I can either pay you 10x as much money on the back end of the policy, or I can cut that premium by a factor of 5. So layer 5 is products with digital energy embedded in them. And layer 6 is services with digital energy embedded in them, and like an insurance policy.
This actually makes a lot of sense. What if insurance companies added Bitcoin to their investment portfolios and made significantly larger returns? This is exactly what Saylor is suggesting, as it will be a win-win situation for both the company and the client.
I think you'll see an explosion of really cool applications built on the Lightning protocol, right? Because Lightning reduced the cost to move Bitcoin by a factor of 100,000 or something. It increased scalability by 100,000. But the vision has been there. I think most of the other stuff is just shortcuts. The problem with the shortcut is ultimately you can get away with it, but you live at the pleasure of the regulators.
According to Michael, the real talent is working on the Lightning Network, as it's just getting started. He says all other cryptocurrencies that are working on things like smart contracts are like a remote bomb. It's just a matter of time before regulators press the red button and start cracking down on these projects, as they are unregistered securities and not commodities.
The issue with ETH is, if you want a decentralized network, you have to actually install a protocol, and it has to run unmolested unmodified for 5 to 10 years before you can conclude that it is decentralized and censorship resistant. And ETH hasn't even got there yet. The clock on ETH won't start until after. The problem with ETH is after the merge, they've still left all sorts of questions. What's the issuance schedule going to be for the next 1,000 years? What are the staking rules? What are there's so much, there's such an ambitious technology agenda that the protocol never stops mutating. And the problem with an ever mutating DNA structure is you generally end up with a monstrosity, right? You can't keep mutating the protocol for obvious reasons. So ETH isn't really something that you could have an opinion on yet because they haven't stopped mutating it. If I had to have an opinion on what I see in front of me, what you see is this is something that was sold as an ICO to the public. The ETH Foundation, Ethereum Foundation controls it. It's an investment contract, right? It's been hard forked multiple times, and the hard forks aren't just hard forks to fix a fatal bug. They're hard forks that change the underlying monetary protocol. And the protocol keeps materially changing, and it is never stabilized.
Saylor hasn't really been a big fan of Ethereum, and rightly so. He believes that if it requires constant changes in the protocol, hard forks and splits, then there is something very wrong with it. According to him, Ethereum is more like a software that requires bug fixes every now and then, questioning its sustainability. This isn't the case with Bitcoin, as it is perfect the way it is. This will be it for this video. What do you think about the whole Ethereum versus Bitcoin scenario? Let us know in the comments. If you learned something valuable, consider sharing this video with your friends and family so they can benefit from it too. See you guys in the next video.